Well, thank you very much. I first and foremost want to thank Meridian for including us in this discussion. And I want to thank all of you for sticking around to the very end to hear this really critical perspective that is a linchpin to all of the conversations we had today around accelerating and growing space. A lot of the themes explored today and the topics, I think, did a really good job at punctuating the fact that this moment in space is different. We all know that. And one of the ways that I like to think about it is they really underline these structural shifts. So these shifts that are redefining the way that we think about space and the way that we move within the ecosystem. Another really critical structural shift is the fact that private capital is now a co-architect in developing space capabilities and sovereign space capabilities. And what this does naturally is it introduces this mismatch and this tension. So there is this tension between capital availability and infrastructure readiness. Nations want sovereignty, investors want bankable structures. We all want a growing and thriving space economy. And really closing this gap is a critical, and I would say one of the most critical challenges in meeting this moment in space. And it's also going to be a central theme in a lot of the topics that we explore today. So I want to thank the three of you for joining the discussion because you offer really unique perspectives to this conversation. I want to structure the conversation today in three parts. So the first part is really going to talk about establishing the stakes. So level setting, what are we actually talking about here? I then want to go into structures that actually work. So how can we make space bankable? And then last, round it out with a conversation that all of us love around risk, control, and geopolitics. So let's dive in the 30 minutes that we have together. So as a scene setter, I think it's pretty clear that the question is no longer around if private capital will become part of space. It is already here. Now the question is around when private capital comes into space, at what cost? And who controls the underlying infrastructure, either nationally or globally? And I think the conversation of private capital in this conversation in some ways obscures what sovereignty means, because then that by definition means ownership. And so opening it up to any of you that want to start, my first question is, what does a nation actually need to control in order to claim that it has sovereign space capabilities? And how is investment shaping these strategies beyond the current utility of space that we think about, like satellites and launch systems and others? So open to anyone who wants to start.
Yeah, sure. Why don't I go first? Thank you. Thank you for that. I think in terms of control, you used the word there mainly about sovereignty means ownership, and we really try as hard as we can to educate most of the government and sovereign customers that we speak to that ownership is not what you need to control. Control and ownership are not necessarily the same thing, and this is not something that hasn't been solved already. There are a lot of public-private partnerships that work around the world. We've made many investments in energy parks and helicopters and aviation assets where you can provide a distinction between ownership and control. For us, sovereignty is about really the security of the asset and the capability of the asset, which is, do you have control over what that asset does? Do you have control over what the asset produces? And then do you have control over, in this case, the digital data, right? The data flows. And those are all things that we think we need to educate the ecosystem about, to say, don't think of sovereignty as ownership, think of sovereignty as control, because they are two things. But it is very hard to escape from that, because it's quite hard to talk to politicians who really want ownership, because that's what grabs headlines, that's what they want to show to the public. So we have thought through that as well, and there are ways to solve for that. There are ways to give synthetic ownership, if I can call it that, but there are ways to address optics without undermining private capital. But it takes nuance, it takes detail, and it takes a lot of effort for everybody at the table to be willing and cooperative to find that solution. Often the issue is that the people at the table come with a preconceived idea of what they want, and they've just designed a capability and a need and say, okay, deliver me this. And then once you give them the cost of delivering that, they then realize, okay, we need to rethink. So more collaboration is needed to solve this.
Just one thing I would add to that, just around like the different procurement models, and Praveen mentioned, public-private partnerships, and it's a model that we've seen used all around the world and here in the US to deliver various critical infrastructure projects. There are ways of actually structuring these to, I guess I should take a step back, I guess. The kind of, issue around bringing private capital is, are you relinquishing control and ownership of the asset? And there's ways to kind of structure around that. So, a typical kind of procurement method that we use for PPPs, as we call them, is like the design, build, finance, own, operate and maintain. So you're passing all those responsibilities to the private sector. There are ways and other structures, so we could just do like the design, build and finance, and the off-taker or the counterparty can retain the responsibility for operating and maintaining the assets. So there are like different models to suit different situations as well.
And I think for me, so I mean, as you said, it's clear that it's the sort of control of a capability that is sovereign. But what that means technically, so I think has sort of changed and evolved and continues to evolve. There's been a shift now recently from interdependency to independency. We see that there's much more investment to build up this capability. And it's sort of also keeping it closer to the specific nation. So we see this implication on the supply chain, for instance, that now you often have to be in the nation you serve, because that's how you then, that's now the sort of revised, slightly tighter definition of sovereignty. So we see suppliers moving in either by making acquisitions or JVs or investing in the company. And then we see also some companies or situations where it hasn't really been clear what sovereignty is. So for instance, EQT, which is a private equity company, tried to, or made a deal with Eutelsat to acquire their infrastructure assets, and it looked like with Eutelsat retaining some control of the asset, and it was going to still be headquartered in France, that would be sufficient. But then a few months back, the French government then blocked that. So I think you can sort of get what it means overall, but exactly what it means needs to meet that requirement is not entirely clear yet.
Yeah, well, what I think is so fascinating about all this is it's not just blending the ecosystems to move forward, right? What we're really talking about are like these cultural shifts of the way that these industries have historically done business. And I think the concept of control is interesting because in the space world, I think control for some companies or governments is seen as a necessity. It's just because the way we've always engaged in space systems are risky and expensive, right? So Fredrik, I want to stay with you for a second, but when you look at these blending of ecosystems and these cultural considerations, what are some characteristics that governments and companies should think about when looking at these large-scale infrastructure plays?
Yeah, I mean, I think the first thing is really for the government to have a very clear strategy of what they need. That might sound obvious, but I think that's not always the case. I think this starts with what you have today. What are the capability gaps that you identify today, and therefore what you need to do to close those gaps. And in that, being quite open with what the solutions are rather than what the products potentially are, but what is it that you actually need and what capabilities you have. Being quite open around what technology solutions could be the most appropriate, being quite open about what financing solutions would be the most appropriate. I mean, one thing that often comes up is now with the LEO, and everyone wants their LEO constellation. But for most countries, you might not actually need that. So it's latency, which is then the key criteria. But what are the use cases for latency? And could you, from a budget perspective, I mean, is that something that you could actually support from a budget perspective? So I think starting with the strategy, an unbiased view of what you actually need and what you can afford, and then move into more then around the products and how you structure that. And then you can also go into then how you're going to source it and what the different models are, whether it's you contract as a service or whether there's some assets then where you do asset-backed financing and so forth. But really starting with the strategic alignment, I think, is key and something that some countries could do much better.
And I imagine for some countries that are maybe not as advanced, the strategic alignment is easier, right? Because they can then align their priorities from the beginning. Because one of the things that I've observed, which is really interesting, is so we know that there's these kind of like two worlds emerging within space where government budgets have grown, systems are trying to expand to meet the moment in terms of regulatory frameworks. But the commercial acceleration of capabilities and just the utility of space is just exploding, right? And these are on two different cycles. And Caitlin, I'm coming over to you for this one because it's a really interesting dichotomy in terms of how you do that alignment. And Macquarie has done a really good job of designing these like regulated, asset-backed plays. And so I'm curious from your perspective, what makes a sovereign space system or these space-adjacent capabilities growth equity ready? And are there certain things that like signals that you look at in terms of scalability and commercial traction and other alignment that would be interesting to you?
Yeah, for sure. And thank you. And just to give a little bit of background to my role at Macquarie. So my role is to bring capital and expertise to assets and projects and essentially grow and scale them into infrastructure platforms. So when we look at different investment opportunities, we obviously look at a number of different things to consider whether they're growth equity ready. I think first and foremost, and as we said, it's fairly obvious, but just ensuring that there's alignment with the strategic objectives of the government or the procuring agency, because that just gives some real comfort over the robustness of demand for the asset, and also can kind of defray the risk around the revenue profile and that kind of thing. In terms of other items, it's can we grow and scale this business in a capital efficient manner? When we scale, is there sufficient kind of, addressable market or demand to absorb that scale? Secondly is around technology risk. Infrastructure investors, it's very difficult for us to finance, technology risk. So ensuring that the asset is de-risked from that perspective. Just around, de-risking the revenue profile and, looking at the level of contracted revenue and offtake just to get comfort around that. And if there's not a level of contracted revenue, like is the demand inelastic enough that it's, predictable and you're able to kind of underwrite it? Other things obviously around, regulation, like do we have all the necessary licenses, et cetera, to operate? And then also just from like the competitive standpoint, like does the asset kind of operate within a highly competitive environment, or are there kind of like high barriers to entry that we typically look for? And one last thing, just around operational complexity, like is there operational complexity in the asset, and if so, can we manage it and mitigate it sufficiently? And that's where kind of like the expertise of management teams and all that kind of can come into place. So, it's something that we consider. Just in terms of, some real life examples. So from like an infrastructure investment perspective, we're seeing a lot of opportunity now in the ground segment. We see a lot of demand, not just from government customers, but also from commercial customers to get comfort over that profile. And, it's an asset and a project that's scalable, both from an organic and an inorganic perspective. Around, like launch and, other kind of industrial capacity applications, it's very interesting from an infrastructure perspective, but I think that's kind of one area where we'd need to see kind of a level of contracted demand or contracted revenue, just to get comfortable with the revenue profile of those for now. Yeah.
It's a big problem that I've seen emerge in a lot of these nascent markets, because what you were explaining, there were a lot of these divergent data points that paint a large picture. Some of them are quantifiable, some of them are qualifiable that we know are going to happen, but you don't have these definitive things you can point to. And so it is a difficult challenge. And Praveen, I'm coming to you to bring you into this, because I know that you've looked at a lot of these deals in terms of like how can you unlock new capital and potentially infuse confidence in some of these areas. And so can you talk through some of these models like sale leaseback and capacity as a service that could engender that kind of confidence to allow for these infrastructure plays and these nascent markets to grow?
Yeah, sure, absolutely. I think maybe we can, I'll talk about a few different ways we've tried to do this. So to connect the thread from the earlier points that Caitlin and Fredrickson made, the public-private partnership model that we have is very much around the partnership between the underlying end user. So one of the examples is the UK Ministry of Defence for decades had to provide the search and rescue capability around the shores of the UK for all marine activity. And they realized that that's a huge drain on their budgets and capabilities and resources, and they decided to privatize the entire enterprise, but they still wanted to make sure that the deliverability was still in their control. And the way they did that was they put it out to tender, they allowed people to bid, and the operators in turn then were able to provide a service. They were able to fly the helicopters, they were able to do the rescue, but they now had this huge capex that they had to do to commit. And ultimately, if you fast forward 20 years, now that they've done 2 cycles of this, you have a very, very efficient mode of funding, perhaps almost as efficient as you would have when you're looking at, sorry, I don't know if it's gotten too loud, but when it's as efficient as you would have done if you'd just done government bonds and done the funding directly through the UK government. So that is what you want to try and unlock, which is you want to create a structure where the underlying capability and action is still the same, but the end result is a more efficient capital flow and the more efficient use of the capital. And the structure there was really for us to acquire the helicopters, lease it to the operator, knowing that there's an underlying contract, which is really with the UK MOD ultimately. So that helps us price it as if it is UK sovereign risk. But from the UK sovereign perspective, they're not actually liable for the contracts that they've written. But in addition to that, what we've done is actually what they have step-in rights, which means now that they've created the public-private partnership model, they've given the operations to a third party, they're not at their mercy. If something does happen, they actually have access to the critical infrastructure and the resource that you need to continue the operations, because if something happens with the operator, you never want to stop saving people that are in distress in the sea. So that is kind of the way we've done it. And we've taken lessons from helicopters, from other industries, and we've said, okay, what can we do in the space ecosystem? And a lot of the same themes follow. It's, okay, and I think to the earlier point, there's also a distinction between national security and sovereignty. So depending on the use case and payload, if you're talking about SATCOM, and you want sovereignty because you want to demonstrate that you have control over the capability, because you don't want somebody turning off broadband capacity for citizens in remote areas, then that's a different sovereignty need. And you can do that through control and contracts and public-private partnership models. But if you're thinking about national security and you want surveillance of your shoreline and your borders to protect your borders, then that maybe is not just about control. You probably also want to think about ownership. And there, you want to make sure you do have access to the asset or some kind of step-in rights. And finally, I'll talk about what we also mentioned on the EQT Eutelsat trade. Ultimately, that was the national security sort of part of the government saying no. It wasn't competition markets. It wasn't, issue of FDI. It was an EU country, right? It was it was a US structure, but the argument was about national security, and this is where I think Caitlin and her team at Macquarie and what we've done at SLI, there are many ways to structure these transactions where you don't have to get into the data flows of the secure data, where you don't have to take control of the buildings and the secure perimeters and the fiber optic cable leading up to it. You can free up the capital, structure the deal in such a way where all of the efficiencies are there while leaving the most critical components in control of the people and in ownership of the groups that want to maintain the control. Does that all make sense?
It does, and I want to pull on a couple of pieces for that. So I think what was interesting about you talking about, national security and sovereignty, and then we all know that you can't have a conversation about any engagement in space without commercial and return and development being a core component of it. And I think it's an interesting concept because it does shape how these partnerships are growing, and a lot of these geopolitical concerns and a lot of the practical applications of what you're talking about. So when we look at partnerships and just how they are restructuring globally, this space economy acceleration is doing it in very interesting ways. So we've seen across the globe, partnerships are starting to form more for like alliance-based capabilities, right? So strategic alliance in that way. But it's also more based on alignment and not on price a lot of times because of what it signals for these large infrastructure plays in space. From a practical stance, from an investor stance, when we talk about partnerships, and I'm going to say this inflammatorily for a reason, we were told to invite tension, but what do these genuine partnerships look like in terms of control that are not just like dependency rebranded? So when you have investment as now part of the conversation, how does the government then view that when it does wade into the national security space where they may need to take back control of assets for needs? Fredrik, do you want to start?
Yeah, sure. So talking about sort of risk sharing and so forth. So I think, the way we look at it, so you either can sort of manage a risk or you have to somewhat price it. And so we are a satellite and payload manufacturer, and there's certain risks, therefore, that we are sort of happy to accept, whether it's a technical risk around developing a new payload, whether it's the execution risk of delivering on time, and also being accountable for cost and taking a fixed price and so forth. Those are the risks we can control and therefore should accept. I think where it gets more difficult is this more sort of regulatory risks, which are very difficult for us to manage, whether it's around tariff, taxes, sanctions or export controls and so forth. So that I think that sort of will sit with the governments in a way, because if we had to price that in, it would just be too expensive. So we need to then protect ourselves through how we enter the contractual structures around that. And I think this is sort of why the governments, what they should focus on is to try to make those rules and guidelines as transparent, as clear as possible. Which is, of course, difficult when you have a very evolving market at the moment and so forth, but at least making it as transparent and clear to us manufacturers, and that would potentially allow us to also take on some of those risks, but otherwise it would be very difficult to take on risks that we can't effectively manage.
So especially in public-private partnerships, like risk allocation is a huge part of structuring these projects and transactions. And just to echo Fredrik's comments, the most efficient way to manage that is just allocating the risk to the party that's most able to manage that risk. And, typically for, developers and operators, as Fredrik mentioned, it's very difficult for us to manage, external regulatory risk or, political risk and that kind of thing. So typically, we'd build into the contract, specific relief regimes if, for example, a change of law happened that, materially impacted the project's ability to operate. And that's kind of how we would manage and mitigate that risk and, be able to make that asset financeable. I guess the flip side of that is, you're transferring a lot of other risks to the private sector that, around deliverability and, financing and all that kind of thing. So there is, having a balanced risk sharing mechanism is really important.
Maybe if I can then give a couple of examples of opportunities we're pursuing to try and think about this. Hopefully I'm answering the question you're asking and not what I want to talk about. But let's say one example is it's a small geo. It's suitable for a small state operation, which includes all of their needs, but mainly around SATCOM. And they ideally want to have this as a sovereign system. They want to build out the whole capability. They want knowledge transfer. They want IP. They want the optics. They want the big branding. they then went out to price out the entire capex for that and commit it to that upfront, then maybe it becomes prohibitive or inefficient. And there, what we can do is say, okay, we preserve all the optics, we preserve all of the ground part of this. We build the antennas and the ground infrastructure, or maybe the sovereign state actually builds all of the ground elements of it, and maybe the manufacturer works with them on the knowledge transfer and the IP and training local people to sort of develop the space economy in the country. But the satellite itself that's in orbit is the thing that we can then use as the way to like do the risk sharing, where we say, okay, we make that available as a capacity to you for the contract, but if there isn't a performance, we know that we can move the satellite and use it somewhere else. So that's kind of the way you could separate the risk and say, okay, to Caitlin's point, they take the risk that they really want and can take, and then we can bring in efficiencies and efficient capital for the portions that can be more sort of transferable. If you switched it to another opportunity, let's say a LEO constellation that's doing Earth observation, it's because of the way the constellation is working, it really doesn't make sense for any one country to say, I want to have 100% of this capacity, because it's not flying over your jurisdiction 100% of the time. So what they really want is to ensure that the data flows from any images captured over their territory goes to them. The rest of it, they really don't care. So that can be another way to separate the risk sharing. And fortunately, we live in a world where you can build firewalls within hardware and software to protect for all of that. And then it becomes a question around cybersecurity and encryption. And that's ways to solve these things.
Have you all found that generally in practice, people are amenable to that because they realize it's the way it has to be?
No. We've spent 3 years educating dozens, if not 100 people, and maybe 5 of them have got it. Yeah, it takes time.
It takes a lot of time because this shared risk responsibility, but even just the ecosystems have such different risk ethos in terms of how they look at problems that I think it's an evolution for all of us across the ecosystem. So my last question to you, and you teed it up perfectly about this education component. If each of you had one thing that you could change in the government's way of thinking about risk and, shared infrastructure and sort of these sovereign capability financial structures, what would it be? And Praveen, let's start with you.
Sure. I think having tried to do this for firefighting for many, many years, it's simply to like include leasing into their core RFP. If they can start doing that, I think the number of structures that become available where you're not forced to bid to their limited contract.
I think for me, it's around being open to different procurement methods and, different ways of delivering assets. Like one thing we've found really effective is what we call a pre-development agreement. So we would enter into an agreement and essentially jointly develop the project together. So it's a really good way to for a government to be involved in structuring and, assigning these risks and, ensuring that they can retain control of the certain things that they're, worried about. So it's just a really effective way of delivering assets and making sure that everyone's aligned.
Yeah, and for me, not saying necessarily changing, but I think what is really important is that then in this procurement that governments keep create a competitive open playing field where new companies and like ourselves can come in with new disruptive technology, and that's being assessed for the value it brings. And then also being open to new financing models and so forth, so that we get this trade-off correctly between the need for control, but then also encouraging new technologies, new models, and new ways of contracting, and avoiding sort of bias and inertia against some of these established national companies that have been serving for the last 20 years, but really open up to create a more level playing field.
Well, I want to thank each of you for your perspectives because, in my opinion, we're at a place within the space economy where this is all inevitable. We have to close these business cases for accelerating growth, and this is the only pathway, and it's going to be clunky, but it's going to get easier. So again, to Meridian, thanks for including this in part of the conversation, because it's really how we accelerate forward. So thank you all. Thank you.
Thank you.